good to see you as always. Big fan of your work. Love the research you were doing, looking at some picks going into next year in the energy space. How should people be selecting stocks based on this massive data center build out we're seeing in this country?
Well, thanks for having me back. I have a pretty unique and contrarian view than most, which pretty much disagrees with most strategists and economists, which is I actually think that if you believe that the world is moving to a multipolar economic system from a unipolar system that we've enjoyed over the past 80 years, then what that means is that the US is going to have to re-anchor around energy and power, and in particularly power, as your last guest was talking about for nat gas and electricity generation, of which data centers are a big driver, but they're not the only driver. So as you think about the US, where we've offshored a lot of production, and the attempt to bring back semiconductor fabs like TSMC in Arizona, or steel mills, or shipyards, the things that President Trump has been talking about in terms of foreign reinvestment in the US, all of that is going to require firm baseload. And that is the big shift that's occurring. And there you have coal, that's unpalatable in terms of building new coal plants like what China is doing. You have nat gas, the primary solution that we see as the winner in the near and medium term. And then you have nuclear, also a beneficiary there in an administration that's very pro-nuclear. All of that rolls up into really a re-anchoring around physical, which we have not seen in at least 40 years. So that to us says that GE Vernova needs to really be a core holding in any large cap growth portfolio. And we had that as last year's winner, which returned 88% for our top pick. And we're choosing it again because even though the stock has run quite a bit, we actually think the opportunity is still being underappreciated, particularly in terms of the scale of the new orders, but also the service contracts that layer on top of that and the switchgear that needs to be associated with all of that. So when we look at that together, we see a very bullish outlook for GE Vernova.
Jed, let's just stay on GE Vernova for a second. I can tell you, and I know this is not the case, but people hear GE, they're still thinking this company's making light bulbs and appliances. You and I both know that's not the case. They've split the company up. Next year, what are some of the biggest catalysts for this company, GE Vernova?
Yeah, I mean, I think continuation of the current trends, which is largely, so this quarter alone, they will have usurped all of last year's orders for natural gas turbines. 50% of all electrons, if you exclude China, in the world are generated through a GE turbine. And so as you take that gas, you have simple cycle and combined cycle. And what we've seen so far is more of the simple cycle, shorter time frame to get up and running in the permitting. And we're going to start seeing the combined cycle, so this will generate a lot more power, start to roll through. They've quietly doubled capacity from 50 to 100 now. And then, as I said before, on that power side of the business, by the way, you've also seen pricing that's tripled over the past 3 years, from $800 a kilowatt to now $2,400, $2,500. But none of that really incorporates the service side. So each one of those new turbines is going to come with a service agreement. Think of this as like the agreement you have with if you have a natural gas furnace to heat your home, or even some people have oil furnaces. They'll usually come with a service contract to make sure it's running at optimum levels. Well, these big electricity, combined cycle turbines, they also come with those service contracts. And so but the first outage isn't for 8 to 10 years. And so you start to build a recurring revenue model that's all very accretive to the overall business. On top of that, they're rolling in an acquisition of Prolec, which is not in the models, which will come in 26. And all of these plants are going to require switchgear, which is in the electrification business. And the fact that the wind business is sucking wind is actually a good thing for profitability for the overall business, because that was the laggard and was dilutive. So we see the trends of both electrification and power being the driver for GE Vernova.
I know you also cover Tesla as seen through the prism of energy. But this
Yes.
year, I've hopped on every single Tesla earnings call. I hear Elon talking about AI, talking about cars, talking about driverless cars. Should Tesla still be viewed as a good play on energy? And what is the state of their energy business at this point?
Well, I think Tesla is being viewed more and more on autonomy and energy. And I think with Elon's pay package, the expectations have shifted to, what are they going to grow organically, and what will they need to fold in inorganically? And I think that's what's driving some of the expectations, so as well as is part of that automation, both with automated vehicles and going to driverless down in Austin now. Also moving to Optimus in terms of the robot and what that might mean. What is happening there is there's really a de-emphasis on the auto business, which we value in a sum of the parts analysis that we've published. It really only about $30 to $40 per share in that business. So, what you've seen is a pivot where, Tesla was looked upon as an EV company, and through the transition, you've really seen energy grow, also equal or probably a little bit worth more than just the auto business. And then really autonomy makes up, over 70% of that value today.
All right, we'll have to have you back to talk about some more of these picks. Jed, thank you so much as always. Appreciate it.